Buddy, it is Friday, the 29th of May, 2020. This is Brian Shannon speaking from alphatrends.net. Hopefully you had a good week of trading. The markets certainly did, as did the month of May. They say sell in May and go away, and it's good to be aware of seasonal tendencies. However, it's not a trading strategy. We always want to be aware of potential levels of resistance, like our Fibonacci's. We want to be aware of our volume-weighted average price levels, the 200-day moving average, but this market continues to defy the skeptics and continues with the pattern that is clearly higher highs and higher lows. On this daily S&P 500, you can see we did close above the 200-day moving average, came down and tested it here intraday today. Looking at the 30-minute time frame, you can see that we were briefly below the week-to-date volume-weighted average price today, but twice this week we saw the 5-day moving average is where the buyers showed up once again. There's a reason I've had the 5-day moving average on my chart for the last 20 plus years. It is one of the best indicators of the intermediate term trend, and when we have it rising, we give the benefit of the doubt to the buyers. And again, we have higher highs and higher lows, so buyers remain in control. I think next week the level that's going to be first and foremost of potential significance will be the low from this week. That is where we had seen the prior resistance. It found buyers here and turned into subsequent support. So now 297 to 298 is our key level as far as where it has the potential to go. Again, this is why I don't do price targets. To me, the trend is higher. I look at this market and say it's innocent till proven guilty. Let's let the market tell us where it wants to go. We want to be aware of the potential levels of resistance, but we don't act until we have price confirmation that it is in fact resistance. This NASDAQ, again, what do we have? What's the pattern here? It is very, very clear. And this week we made another important higher low. So in this uptrend that has really been in effect since that gap in April, we have a beautiful pattern of higher highs and higher lows. People are trying to short this thing to no avail. And this week we saw a very important new higher low made at about the 223.5 level. Now, the thing is, that's, close to 10 points away, so really 224. Anyways, that's about 10 points away. So, as for setting a stop, I wouldn't use a stop down there. I would probably go underneath this level. But again, it depends on what your time frame is. Always look at the market and say, how does it fit in with your plan and your time frame? If you're a long-term investor, you shouldn't be watching this video. So just turn it off, Warren Buffett. I know you're secretly watching it, but it's really not going to help you with what you do. It might have helped you with your airlines, but back to the NASDAQ. Again, higher highs and higher lows. It's innocent till proven guilty. Quit trying to pick a top. Let the market tell us when to get out, and that's when you should be out of the market. The Russell 2000 came up to the volume-weighted average price from the December of 2018 low right in here, and that's where it found some supply. I still think it's highly likely we go up to the 200-day moving average in the Russell 2000, and if you look at it, we're above this prior band of resistance at 135, so it's still a valid breakout from this past week. We saw the gap higher, and if you chased it, you could have made some money initially, but now we're pulling back. We're holding above the volume-weighted average price from the 18th, and below that, I think the most significant level we want to see this market hold is about 134. That's where this most recent upward move began. We could even take a look and say, well, what about, what would a normal retracement be? And a normal retracement would be 38.2%. And guess what? That's exactly where it lines up. If we take this low to that high, look at where that 38.2% level comes in. An exact retrace down to that volume-weighted average price. So it would be normal for it to pull back to 134, although, we don't want to be buying right now. We want to look for the potential of support in that area and then wait for the market to turn higher before we get involved in them. Semiconductors remain incredibly strong. The pattern of higher highs and higher lows is also intact here. I think that this week's lows at about the 135-ish level are going to be important moving forward. We've got a tight range here, and if we look at that 30-minute time frame, What did I have it drawn in? 15-minute time frame? 15-minute time frame. Again, the higher highs and higher lows, and now we've got this band of support which was tested this week, and we have this band of resistance which is tested. Here's the thing, when you look at patterns like this, the things to notice are how long does it take in between tests of that high? As the time in between those tests grows shorter like it is now, it tells us the buyers are getting more persistent time-wise. And then we have this band of support, but we didn't see the market pull back down towards that level today. Instead, buyers got more aggressive at 138-ish. That tells us the buyers are getting more aggressive, not only time-wise in between these tests, but price-wise. They weren't waiting for a pullback down to 135-ish. So this group looks like it's ready to continue to move higher once again next week. I would say if you're looking for a new money purchase, your worst case stop would go underneath today's low. I would prefer for a fresh money buy, maybe a slight pullback on Monday and then get going. That way we could raise our stop even underneath here and therefore reduce the overall risk, or keep the same dollar amount at risk and then keep our stop at that tight level with more share size, thus giving us the ability for a greater profitability. Biotechs continue to just bide time in here, digest this big run up they've had and the breakout. So the breakout beyond this band of resistance has been tested twice in the last couple weeks, and it's holding. This low is an important low, clearly. We saw the shakeout there on Wednesday and the subsequent recovery. Now, when we look at, let's go to the 30-minute time frame, what we're seeing here is, we're not seeing that same type of pattern, but what we do see, and this is important, you hear me often say from failed moves come fast moves. Well, what happens when it breaks that support isn't so important as what happens after it. It quickly came back up, meaning that people who sold short under this level, well, they got squeezed. The people who sold their long position most likely are looking to get back involved. From a failed move often comes a fast move. Keep your eye on a move beyond 136 next week. The preferred way for that to happen would be for it to rally up, maybe even slightly through, create a higher low, and then get going. That way, again, we could set our stop up higher. What we want to do for risk is maybe measure it against the volume weighted average price from this low. Financials. We spoke, this is one of the most beautiful, from a failed move came a fast move. We've been talking about this the last couple weeks, and this week it finally made it up to the year-to-date volume-weighted average price. The average price paid for the financial stocks is right here at about 24.15. We came up to and slightly through that and then backed off. We're still healthy overall in these financials. You can see they're holding the rising 5-day moving average. Next week, if it can get probably back up above this little level right here, which was support for 2 days and then resistance today, then it's probably going to head higher once again. And if we don't make a lower low in between then a stop could go underneath today's low. I talk about this stuff every single day for subscribers to alphatrends.net. And I also have a book, if you haven't seen it, called Technical Analysis Using Multiple Time Frames, where all these concepts are explained. You can find that on Amazon. Thanks for your time. Have a good weekend.